Hello, Professor. Hello, everyone. Today I will talk about the cancellation of Cobalt Holdings IPO and what this means for London's IPO market. This event was not just about one company, it reveals deeper structural issues. Let's begin with the market context. In short, London's IPO market has collapsed from almost £17 billion in 2021 to only £182 million in the first half of 2025. The cancellation of Cobalt $230 million IPO was a clear signal of weakness. At the same time, rivals like Frankfurt, Zurich, and the Gulf are gaining momentum. Brexit out follows, valuation discount, and the listing are putting pressure on London. While recent policy reforms remain too small, unless bold reforms are made, London risks being sidelined in global IPO rankings. Let's step back and see the IPO trend over time. In 2021, London's IPO market reached a peak with nearly £70 billion raised, and just in Q2, over £5 billion came from 17 main market IPOs. But since then, things have sharply declined from 2022 to 2024. Both the main market and AIM saw a big contraction. And by the first half of 2025, only 9 IPOs were completed, raising just £182 million. That's a 64% drop compared to last year. This really shows how London's domestic IPO ecosystem has collapsed and why the weakness is seen as structural, not just temporary. But how does London compare with the rest of the world? While London struggles, other markets improve. In Q1 2024, MEA IPO raised £6.70 billion. Europe as a whole raised £4.8 billion compared to £1.2 billion the year before, but the UK alone raised only £0.3 billion. At the same time, the gold market raised $4.1 billion from 27 IPOs in just 6 months. This shows while others are rebounding, London is still falling behind. After comparing London with Europe and the world, let's focus on the key event, the cancellation of Cobalt Holdings IPO. Cobalt Holdings plan to raise $230 million at 2.56 pound per share. The proceeds were meant to purchase 6,000 tons of cobalt from Glencore. Cornerstone investors like Glencore and Anchorage supported about 20% of deal. The model was innovative, inspired by yellow cake in uranium, and cobalt is highly strategic for electric vehicle and the green transition. So those were the deal terms, and on paper it looked strong. But what did the company and the market actually say when it got cancelled? Let's look at the headline. The company itself never gave an official reason, but reports said demand from investors was too weak. The Financial Times note that private funding might be an alternative. What's striking is that just weeks earlier, the CEO Jack Greenberg was confident this was the right time to build a cobalt stockpile. So the sudden cancellation shows how fragile confidence in London has become. So why does this matter for London's market as a whole? The cancellation shocked investor confidence. Underwriters became more cautious, and many companies turned their attention to Frankfurt or the Gulf. The key point is this was not just one failure, it was a blow to the credibility of London's IPO market. And while London lost ground, rivals gained momentum. In Frankfurt, companies like Autobock and Stade are preparing to list. Zurich is getting ready for Swiss Marketplace Group. And in the Gulf, strong liquidity and investor demand are driving record IPOs. The center of gravity for IPOs is clearly shifting away from London. Now let's look deeper at London's structural pressures. After Brexit, London lost its easy access to European investors. Listing and liquidity shift to Frankfurt, Paris, and Amsterdam. UK companies also trade at lower valuation than US or EU peers, which discourage new listing. On top of that, London is facing its worst wave of delisting since 2009. Fewer companies means less liquidity and a weaker IPO pipeline, a negative cycle that reinforces itself. So, how has London tried to respond? The FCA launched the PISES framework in 2025, allowing private market trading. The first operator was licensed in August with stamp duty relief. Pension reforms were introduced to encourage more investment in equities. London is also exploring dual listing with Gold Exchange. These are positive steps, but they are incremental, not enough to reverse the decline quickly. Small reforms are not enough. For London to recover, bigger steps are needed. One key move is to channel more pension money into equities because that would create stronger local demand for IPOs. Another idea is tax incentive to attract companies, since right now many of them prefer New York. London should also build a partnership with Gulf and EU exchange so companies can benefit from dual listing and larger investor pools. At the same time, raising ESG and transparency standards is important to rebuild investor trust. This action taken together would give London a stronger chance to compete. Otherwise, it is risk falling further behind global rivals and losing its role as a leading IPO hub. Finally, let's wrap up with the conclusion and outlook. The cancellation of Cobalt IPO was not noise, it was a signal. It confirmed that London's IPO challenge are structural, not just temporary. Rivals like Frankfurt, Zurich, and the Gulf are growing stronger. Without decisive reforms, London risks losing its role as a global IPO hub. In short, London can still recover, but only if it acts boldly. Thank you for your attention.